Good morning, everyone. Welcome to Admiral Markets webinar. My name is Chris. Today's focus is on strategy. So we're going to dive into the markets, of course, in just a second. As always, though, be aware that this webinar is shown to a global audience. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more info on that. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risks involved when trading. So today's focus is going to be on candlestick patterns. As always, though, be aware of the events that are upcoming today with regard to, for instance, the Fed interest rate decision that we're expecting in the New York afternoon. But there are other things as well you want to be aware of. Go to analytics, click on Forex calendar to see the entire list of news events that are expected today, including a pound unemployment rate and claimant count change. Also, an ECB meeting. So retail sales in the U.S. Those are some of the red tagged events. And of course, the Fed interest rate decision. Alrighty, so with that said, let's open the charts. There we go. So today's session is going to focus on candlestick patterns, primarily as a strategy. So basically, in my view, when looking at the market, the higher time frame candles have more influence. So if you see strong candles there, if you see candlestick patterns on a monthly, on a weekly, on a daily, even on a 4-hour chart, those by themselves have more impact and have more importance than, let's say, a candlestick pattern on the 50-minute chart. Now, maybe if we would calculate the ratio of the movement that a pin bar on a 50-minute chart could make, it could be maybe the ratio could maybe be just the same. I don't know. I didn't do any math about that. But typically, though, it's easier to just look at the higher time frames and use that info without any additional tools or indicators. The lower the time frames, the more important I think it is to add confluence to decisions besides candlesticks. So on an hourly chart, for instance, using only candlesticks without any other additional tools, I think is difficult. I think it's better to use candlesticks as a confirmation. For instance, let's say that I put a fib from here to here, all right, and I'm looking for price to turn at one of these deeper fibs like the 50 or the 61.8 or the 78.6 fib. In that case, using candlestick patterns or candles at these fibs makes a lot of sense, right? Because I'm adding two tools. I see a moving average indicating an uptrend. I see price going back to support fib. Plus, I see the candlesticks at this fib. All right. So when I use that as a combination with other tools, I think on an hourly chart, that's fine. 50-minute chart, that's fine. That's an additional kind of confirmation. On a 4-hour chart, depending on the situation, in some cases, just the fact that the 4-hour chart is showing a candlestick pattern might be enough. I still personally like to use the candlestick pattern as part of my analysis, but I know that there are strategies out there that work well that are just solely based on candlestick patterns on 4-hour, daily, weekly charts. I don't know of any strategies out there that are only candlestick pattern based that work well on lower than 4-hour chart. But as soon as we combine them with other indicators, I think it's fine for lower than 4-hour chart. So that's basically just info there. But basically the best patterns, candlestick patterns, are pin bars. Those are reversal strategies, but basically when there's a large candle that shows basically a big wick, for instance, an uptrend, and we see a candle with a big wick and a close near the low with the wick being probably at least 50% or 2/3 of the candle. So something like this. I don't see one example here, unfortunately, but let me draw that otherwise. So when we have a sizable candle like this with a big wick, 2/3 preferably, and a close near the low like this, all right? We've had a series of up candles already before that, all right? So like this. And that pin bar candle, preferably the close is below the close of the previous candle before that. So something like, let's dive into that. So something like this, for instance. So if the next candle is like this, all right, that's a pin bar, very strong pin bar, because it's bearish after a series of bullish candles. The close is near the low. The majority is wick on the top, and the close is below the previous close. So something like this is a very strong reversal signal, and often, well, not reversal, but at least retracement. And price should make a retracement back down to, well, if you want to be conservative, you can put a, for instance, a 21 EMA or a 34 EMA on the chart, and price should go back to that. So that's one candlestick pattern that doesn't occur maybe very often, but is a very strong one. That's a reversal one, though, or retracement one. But of course, there's also great opportunity in with the trend candlestick patterns. The engulfing twin is a very famous one. Let's see if we can find an example here. This one here is engulfing twin. It totally engulfs the bearish candle before that. Sizable candle, has a close near the high, and indeed that sparks off. Well, you have to wait a bit, but it does eventually spark off a rally to the upside. So that's one of those examples. Now entries for those particular two patterns could depend. I mean, if you're looking at the engulfing, if you're looking at the pin bar, first of all, the entry could be right at the close of the candle. The entry could be at a retracement of the candle, or the entry could be at the break of the low. All right, so all three are possible. Stop loss would be above this high. So it depends. I mean, a lot of systems go 5 to 20 pips above a high like that, not to put the stop loss, just 1 pip above it. Sometimes you get a double top. Sometimes you might even get a small break of that top of this high. And you might want to go a bit above that just to give a bit of space. Target I already talked about. You can target a 21 or the 34 EMA. Or you can work with ratios 1-to-1, 2-to-1, or you can put a fib on this candle, look for the minus 61.8 target. You could aim for the swing high, the swing low here, for instance. Those are all equally valid methods. The engulfing twin, basically it's the same thing. You can think if there's a bearish candle like this and we have a bullish candle engulfing it like that, same thing. Entry could be at the close, entry could be upon the retracement, entry could also be upon the break of the high. The stop loss should also be below the low. Same thing, could be 5 to 20 pips, depending on the time frame too, to be honest. Of course, daily chart would be better maybe to go a bit towards the higher end of that. I mean, on the 50-minute chart or the hourly chart, maybe better to be a bit on the lower end of that range. And with engulfing twins that are occurring with the trend, the target could be a lot of things. It could be a break of the high here. It could be a fib level. It could be the next resistance on the daily chart. There are a lot of things. I don't think there's any particular one that any particular mechanical way that is extremely better than deciding the target by discretionary means. But if you're looking for something more automated, then aiming for the top maybe of this Keltner is not bad. In this case, though, it would be pretty close. But aiming on the previous top, not bad. This time too close, though. So we would maybe have to look at a daily chart and say, okay, where's the next resistance level on the daily chart? Like this bottom, for instance, or this top. So when we were looking at, where was it? This engulfing twin, All right, this one is too close, but we can say, okay, let's aim for that daily bottom, for instance, right? That could be a good target to aim for instance. So there are a lot of options with the trend targets. So those are two patterns that we can keep in mind. So let's dive into the euro dollar and move on along, take a look step by step at these majors. All right, so when looking at higher time frames, we clearly see strong candle here, closed at a low. Now, this is no particular pattern, but the candle itself is clearly bearish. And if we look at the chart pattern, that's bearish too. If we look at the momentum prior to that, that's bearish too. So all in all, I do think that, as I said yesterday, nothing changed since yesterday on the monthly chart, obviously. This is a bearish pattern, and eventually the break should happen. Now, will that happen this month? I guess today we will find out with regard to whether the interest rate hike is there or not. Now that I had or still have our doubts whether it will occur, there's one reason that I just realized today might make a rate hike just a tad more likely than I originally thought, is maybe they want to do it because of consistency. They had one in 2015. They maybe want to have one on 2016 and then do, for instance, two in 2017, just to kind of get that step-by-step structure. Because if they don't do one this year, they'll have one in 2015, there'll be zero this year, and then perhaps two in 2017. Maybe from a consistency point of view, they would like to squeeze one in right now. That's something that might make sense as an argument, I think, or I think they might think of as an argument. I personally don't know, of course, but I think that they might think that. So let's see, we'll find out. But Neneth and I were definitely skeptical. I still think it's a coin toss, coin flip, to be honest. And we'll know about, I guess, 12 hours from now. In any case, depending on that, we'll know more about this month. This month, it could be just an indecision candle. You never know. It could be just a doji like this, for instance. And then next month we'll get the break, or even the month after. But ultimately, I don't expect price to break above this range anymore, this resistance. Price, if anything, will go flat, but then break to the downside. That's my 2 cents. I don't see that changing. The only thing that could really change that is a very strong bullish candle this month like this, with the close near the high. Well, in that case, that's a strong reversal or retracement signal. In that case, I would be hugely surprised, but I would have to rethink it, reanalyze what that means. But such a strong bullish signal, of course, would indicate that there could be some bigger ABC zigzag, maybe up to resistance like this. All right, but let's not dive into that too long. Probably not going to happen. So yeah, this is a huge bearish signal, but will that break in the next weeks? Here, the thing is with this particular candle is of course, I mean, in a way, it's usually bearish with a big wick like this, but the close really didn't do much. I think it just kind of stopped right at that support level. So I, as you know, was expecting a bigger ABC zigzag, and I think that we should see that. Monday was bullish. I think we should expect still the follow through for that. But let's see how far. It doesn't have to push too much until it hits strong fib resistance. There we go. We see 38.2 fib being respected. Price is trying to break through that. So I wouldn't be surprised to see price go to the 50, for instance, and turn around at the 50. And then it depends on the Fed rate. I think it go in a kind of a slumber, and then the Fed decision will either send us up to the 78 probably, or down to test the bottom, and maybe break then after that or during this week. So that's a bit of a speculation. From a candlestick point of view, you can see one of those examples You might think that this is a pin bar, for instance, right? And this is one of those points where if you just flatly look at candlestick patterns, one might think of that as, I can see reasons why we would see that as a pin bar, right? Because there's a big wick on top, there's a bearish close, the close is below the previous close. There was a series of upside candles too. So if you just look at those things, I think this one qualifies, right? Same right here. So here, this one worked out fine. We did get the retracement. I think price managed to get back to the 21 EMA. We can add one. I just missed it. All right, so with reversal trades, retracement trades, you definitely want to be careful. If price is that close, you don't want to leave the original risk on. At least move it to break even or move it above these highs here to lock in some profit there. All right, but it was close, but not the target did not get hit, actually. So, but anyhow, this was still an okay signal in the sense that with the trail, it would work fine. And I didn't talk about trails actually at the beginning. And yes, if price has gone in our direction in a retracement trade that strongly with these candles, yes, I would reduce the risk. All right. So this one, in my view, is a risky one. I think this one is an example of a pin bar that I would filter out just because of the fact that I think a bigger ABC zigzag could occur. Well, let's see. Time will tell if that's true. How about this one? Is this a pin bar? It is, but it's not the strongest type because the candle is still bullish. You see that? So, but it did work out. So sometimes, you know, I mean, obviously these pin bars are the very best. This one is a bit weaker. But if this particular pin bar, the blue one, occurs at a spot with strong confluence, there are other factors that play along why this could be a bounce spot. For instance, the Keltner, maybe there's some pivot points, maybe there's a fib level, then I'm not opposed to using it. But my point is that, let's say, the better the pin bar, the less confluence is needed, the less additional confirmations are needed. The shakier or the weaker the pin bar, the more extra evidence I want to see. Let me open the chat box. Does that make sense? I'm not sure if there are any questions in the meantime. Okay, great. No questions so far. Good morning, Pep. Good morning, Kertu. So I hope that makes sense. Also, the higher the time frame, the more weight I put on just the candlestick pattern itself. So, okay. For instance, let's see here. Strong candle to the upside. All right, so if you just look at candlestick patterns, you might think, well, it's not a pattern, but you may think, oh, that's a Mariposa candle, and then it says master candle, and it is. But from my perspective, of course, this was all news event related too. So, but okay, let's forget that for a second. From my wave perspective, I was expecting ABC zigzag. So certainly this candle I thought would maybe get some follow through, but I was not looking for a massive continuation at that point, despite that big candle. So using context kind of helps me make judgments on these candles. But the next one, this big bearish candle, certainly did fit with what I expected because I was expecting ABC zigzag, and it turned out these fibs is what I expected. So this did fit in. That bearish candle totally basically erasing all the gains to the upside. And indeed, a bigger downside than I even expected, to be honest, with this euro dollar after that. It's just a few examples of some candlestick patterns. Here on the euro dollar recently, of course, strong engulfing twin, big wick, bullish candle, bullish candle, bullish candle after divergence. So some examples there on the euro dollar. I guess we can move on. Those two candles are indeed equal in size. And the difference, what differs them between, I am not, is that a question, Craig? I'm not sure if, or is it just a statement? Is it the selling pressure? What if, I'm not sure still what the question is, but basically indeed price just made that upside. It was a news event that that fueled it, the upside, and then fueled the downside. From my perspective, from a technical perspective, this basically bullish candle. Obviously, this is a bearish candle. The most recent candle is the most important one. I think that answers your question. So basically, the reason why it's bearish after this candle is because it erased the previous gains. The close was near the low. Strong candle. So basically, this is the most recent one, and therefore kind of invalidates this one, or not invalidates, but makes that one less relevant. I think that answers your question. So when you look at two candles like that, it's basically a battle between bulls and bears. First, the bulls won, indeed, but after that, the bears took over. So it's like a story in a way. If you have any doubts, then the next candle kind of confirms that. Two candles, always, mostly never hurts to look at the next candle. Sometimes, of course, price might really move away in that next candle, but I would say in most cases, in a decent number of cases, it doesn't. So this one, for instance, here, it's not technically engulfing twins because the bearish candle is just not high enough, but I mean, from my perspective, it's a bearish formation. The retracement gets basically, runs into resistance, is rejected with the next bearish candle, and then the trend continues. Of course, this bearish candle is a bit larger, so that's why it's maybe not entirely the same like that, but ultimately, the most recent one, plus looking at support or resistance and trend. Candlestick pattern books. I don't know those names by heart, but if you send me an email, I can send you some names. I just need to look it up. There's my email address in the chat box there, Kertu. And one more question from Ahmed. Ahmad is, as per your analysis, do you expect your dollar to retrace towards 61.85 before Fed decision, or is that the overview for a longer period? Yeah, I think 5061.8 is doable, but who knows now. Let's see how this 4-hour candle closes. Seems to be a bit having some trouble with this resistance level. And engulfing twins on the 15-minute chart. 1 second. Let me add the pivot points. Still above the pivot point, main pivot point. Pretty big wick at the R1. So I think it's probably best to keep an eye on pivot point S1, see how the candles react to those levels to see if there's a bounce or not. I would never use any pending orders at these levels because I think that's too risky. Could it bounce? Yes. Will it bounce? I have no idea. Maybe there'll be huge bearish candles that bring it all the way down to S2 before price goes into consolidation. This momentum is still here. So I would never use pending orders against the trend. But from a discretionary point of view, could it bounce as it goes sideways at S1, for instance, or even a pivot? Yes. So I think keeping an eye on candlestick patterns at those levels to see if we can get to the R2 and the minus 61.8 target. Sorry, the 50 fib. Makes sense. However, you know, as it gets to R2, depending on the news event, it could do this or it could do this. Really, to be honest. Let's see. All right. Cable did stop at that 78.6 fib. Right there, very neatly at 127.25. Anyone who was looking for shorts at the 78.6 fib, you know, there was 80 pip space there to the downside. So it all depends on how much downside you expect. If you wanted to get out of this trade before the news event, right, then probably the best is to do that right now if you're not out of it already. Trail stop right behind these highs here, and that has been triggered right now. Other option would be to put it at break even and hope for one more push or more, or a lot of more pushes, in fact. Maybe not exactly break even, but maybe plus 5-10 pips. The other option would be to, no, that's it. Take profit, or I would say move to break even. One, two, three, four, five, fifth candle. So from my perspective, I think there's a good chance that this is the high as this, and this is going to be a hook back, considering time factor. But today is still, yeah, I would say there's a good chance with 5 candles now. This does look like a hook back. But the news event could ruin that and could break through the resistance. For the moment, though, I think this is still a hook back for more downside. Now, a way to look for a confirmation of that is a break through this trend line. A good candle through that trend line could be a good breakout there. Candle close, need a low. So not candlestick patterns, only candlestick patterns are useful. Let's say how the candle is built or how it's constructed as it breaks through decision spots like trend lines, moving averages, fib levels, pivot points is important too. Basically, as price would break or push through this trend line, a sturdy close near the low indicates that the breakout is in control. The bears are in control as price breaks out. If price would break out and there would be not a good close, but there would be a big wick like that, then there's a good chance of a false break and or some retracement, and then later on still the break. So that's another way of using candles. So let's move on to the next one, dollar yen, I think, unless there's a question. Are we able to predict the next candle from the daily candle And how do we tell a trending candle from an exhaustion candle? So I think looking at daily candles is always valuable. I wouldn't know, only looking at the daily candle itself, what kind of accuracy we could have. I don't have those stats, but it does give a lot of info. I think that using it in a discretionary way always makes sense. I don't know how good it is to only look at that every single day. As I said, I don't have stats on that, but I think it does give a lot of info just as is. At this upside, you can see every day strong candles confirming that trend to the upside. Some days they're going to be less meaningful. A bunch of candles here that go nowhere, candles out here that go sideways. So yeah, not everyone has a great particular importance. This one here looks a bit like a pin bar perhaps, but the run up is very weak. You see that? Just two small candles. When I talk about a sprint before that, up or down, I'm not talking about two candles like that. Let me see if I can find it here. So this is really nothing. So this is one of the reasons why that pin bar is not great. How about this? Is this a pin bar? No, the wick on the top is not that great, although it did create some retracement. So was a bearish candle. Dollar yen might have here a bearish candle, right? That the wick is a bit bigger. The run up was strong here. The recent part less strong. So not sure about that. I think that the dollar yen might be able to make a correction at this point. We see on hourly chart the fact that this upside has been weak. Yesterday I was saying that if this is kind of like going nowhere, that this could be an ABC zigzag like this. So the news event will impact that, unfortunately, too. So there's a lot of question marks because of that. But ultimately, when we look at the daily chart, there could be maybe a correction back to S1. Weekly chart, though, ultimately, I think when it gets back to S1, it's just a dip because this is still a strong candle last week. These have all been strong candles. So I think that, if anything, this week would certainly just be a retracement still, and I would expect a bounce there. Monthly candle is certainly strong. Strong candle up, weekly, monthly, daily, bearish. So if it retraces, I think it will be only a retracement, in my view. 4-hour chart, weak candles going sideways, no real information there. 1 hour the same. So when we have a bunch of candles like that, we can start looking at chart patterns, as I said, and in that case, it's more looking like this. So let's see. But for the moment, though, I don't think there's any great trade to the downside, in my view. Yes, it broke this. This could be a hook back for more downside, but I don't like trading against the trend on dollar yen. Even though there is a chance this is a zigzag, especially with the Fed rate coming up. I'm skipping this. I don't think it's interesting. From a technical point of view, if it breaks through this resistance, then there could be a breakout to the upside and a retest of this top. All right. Anyone else have a particular? Oh wait, there was one more question actually. How do we tell a trending candle from an exhaustion candle? So let's take a look at the euro yen. All right. So, well, these candles are trending examples. So bigger candles, bigger size candles. Close near the high. Higher highs and higher lows. And only one didn't here, but that's okay. Still a higher high. Sorry, still a higher low, just not a higher high. But that's okay. One candle like that is fine. Even 2 or 3 up to 5 is fine. And so those are trending candles. Exhaustion candles would be something like this here, for instance. Wick, this pin bar, but that shows that upside is struggling. Dojis are great examples of exhaustion candles. Even maybe these candles here, perhaps, right? A bit of exhaustion, not as big, smaller candles. What else? Exhaustion candles are typically smaller. How about this part? Let's see. Okay, here we got some kind of bull flag, so there are some exhaustion candles, but ultimately this kind of sideways correction, so price still moves up and makes a rally, and here you see some smaller candles like this, kind of making a correction as well. Even this upside here, these candles are relatively small. So those are a few examples. So regarding now, on the euro yen, well, bullish candles at least on higher time frames like weekly and monthly. Daily, this is a bearish candle, 2 bullish candles. Doji looks a bit shaky at this point. I would probably need to see a candle close above this top, this resistance level. If it doesn't do that, probably have to see how price responds to the bottom, these support levels too. For the moment, it's going sideways mostly in this zone. So I would like to see a break above it or below it really before being interested. There could be some bounce trades maybe within this still on a lower time frame. So let's see how that goes. But let's put a fib from here to here. 272 target, that could be a bouncing spot. So that might be something to think about, I don't know, but it is going sideways, so that could still be a bounce spot there. But, you know, basically this zone at this moment is the main thing. I don't see any particular candlestick patterns otherwise to discuss. Let's take a look at Aussie, Euro Pound. Let's go. Aussie, wait, let me quickly refresh the template here. Alrighty. So basically, last one was pretty bearish because the high was higher than all of the candles, 4 candles before that. The low too. So it engulfed basically 4 months of price action. That's pretty bearish. Bearish candle. So this month could be just a retracement. Looking at the weekly, we saw a bullish candle. This was a bullish pattern, in fact, as the low is broken, but then closes to be bullish. So that's a bullish candlestick pattern, in fact. This is a bearish candle. This is a bearish candle, but this bearish did not get a follow through. And you see a retracement of that bullish candle. It's still a close. Doji. So yeah, from this perspective, I think that the upside is still a retracement of this candle, in fact. And as long as it stays below that high, I think it still could be running into resistance at the R2 and turn around there. And probably we'll be looking for some pin bar or engulfing twin up in here. That could be a turning spot on the daily chart. Now, if you look at some of the examples on the Aussie, here engulfing twin, and then bearish candles. These are small indecision candles, and then continuation of strong bearish candles. So each of these days followed through. Then we had the bullish pattern, a break of the low, but a bullish close, right? So that's a bullish reversal pattern, and we did see a push up like that. Here, though, there's one bearish candle, so that could have been a difficult one. I mean, from this perspective, it looks like a pin bar. It really isn't, because this upside is not long enough. We need a series of, I would say, 4 to 5, 6 candles, preferably. This is only 2. So this is not a reversal candle, pin bar, but it is a bearish candle, of course. Considering this downside momentum, one might think that there could be a continuation like that, just based on that candle. So from my wave perspective, I was really expecting ABC. So this is, if you don't look at waves, this could be one that kind of catches you there. Ultimately, another bullish reversal candle. This was bearish, definitely, but the next one is bullish, so that idea is out of the window. And we get another correction like that. So stuff like this is a bit difficult. If you're seeing this and you might be expecting a continuation, that's where you might run into some troubles there. That's why waves sometimes help, because it kind of gives you a larger perspective of how far the correction might last. Also, time perspective, 1, 2, 3, 4, 5, 6, 7th candle. So I was not expecting a break of this bottom. And I was personally thinking of a ABC zigzag like this. But once it reaches here, I do think that that could finish the zigzag, and there could be, if there's engulfing twins here, that changes things. I think that could be an interesting pattern for downside. All right, so patterns themselves, candlestick patterns, great stuff, but in my view, not the only thing I use. We got some examples here, engulfing twins, big pin bar after 5 candles up, engulfing twin. Some of those go further, some of them go not as far. Here, pin bar 2, pin bar. Oh, that's not a great pin bar, but it's a bullish candle with a wick at the bottom. So they do a fine job of, in these types of scenarios, they do a fine job of showing the bouncing spot and be very useful. All right, but they won't always work, obviously. Right? Here are 2 examples where anyone trading that would get stuck in a trade. So that's what I'll be looking for on the Aussie. Candlestick patterns with this Keltner is also interesting. As soon as it reaches the Keltner, there could be an interesting bounce or break spot. Here there was a clear bounce, right? This was a clear break. Here there was a bounce. 2 bullish candles. Here there was a bounce, although it did push through that high just a bit there, so I'm not sure about how much. about 3 pips. That's what I was saying. 5 to 20 is always good. In cases like this, the stop loss still survives and he still gets this downside here. Right here. This big pin bar at the Keltner. Here too. Here as well, right? But that didn't work out. Here was a bullish break. That follow through didn't go all too far. Here was a wick at Keltner. This one is a bit of a question mark. Anyhow, you get the point. It does offer an extra confidence point. That's why I like the Keltner on both sides. All right, so euro pound. Let's try to find it. It should be a bit further. Alrighty. Okay, we did break the low. We did close bullish, but there was also a wick here. That's a bit of an indecision candle there. Monthly is definitely bearish. We've seen already a push lower as well. Daily is bullish, plus time factor. 5-6 candles not breaking this low. I still think that at this moment, these two candles kind of confirm what I was expecting of a bigger correction for the moment. But obviously, invalidation level is this bottom, and if it pushes below that, that idea is out of the window. So let's see if price can bounce up to S1, and there could be an inverted head and shoulders there. For the moment, price is looking very bearish, but if there's any bullish candlestick pattern at the pivot point or S1, I think it could still be a bounce up. Let's see, euro dollar. Yeah, exactly. Big pin, big bar at big wick at the not only R1 but at the Keltner indeed. So some confidence there. There was a top. So maybe not surprising that this is retracing. And looking at candlesticks with the Keltner, I think is a strong combination. But it's just two things, of course. You still might want to add some extra analysis to that. So here was a recent example, and just looking at candles and Keltners, as we know, is gave some good setups, but also some that failed. So obviously, so it's a good base, but I would still add analysis besides this, but something to look into. Right? I don't only use this, but these two things. But it's an interesting combination. But my first step is to do analysis. And my analysis personally was showing more potential for ABC zigzag. So let's see, this candle, when this candle closed, we didn't even notice that there was a wick at the Keltner, to be honest, because that's maybe because of the fact that I was expecting an ABC zigzag. So that was my bias. So in that case, my analysis, so in that case, it was not something that I was looking to trade. But you do see price responding to that, falling pretty fast now indeed. And what could happen is that this is A, and we're still in the B part, which might make a deeper retracement. It all depends on how fast these candles will fall, because if they really fall far, and then there's a bear flag with a rate hike, then this could happen too. Alrighty, folks. So that's, I guess, some pointers there on candlestick patterns, looking at recent examples, looking at future potential examples, things that can happen maybe after the Fed decision. If you're looking for more webinars, of course, we have them. We got a lot of webinars still lined up. Not the strategy webinar for the rest of December, but we'll be back in January, of course. Nana takes a look at price action trading school. He talks about some price action entries, so that could be a good fit to today's webinar. Nana does have his recaps for the next 2 weeks, though. And we talk about range bar trading next week. The week after, no, that's Nana. Sorry, we take a look at price action signals on December 22, December 27, taking a look at the euro, and January 5th, we take a look at 2017. So that's coming up. Hope to see you in those webinars. Ahmad did short the euro dollar on that wick, so great job. Excellent. And it's doing well because it broke up below the pivot point in the meantime. So it seems like there's a pretty good chance it will get to the S1. I mean, if you're aiming for the S1, I'm not sure if you do. It's right below 106. I would probably go to 106.02 or something, or 106.04. Give a bit of space. That's what I typically do when I look at a target. I kind of go just a bit above it or below it so that I don't aim for the very last pip. But it depends on your target. I mean, maybe you're aiming lower. But great job there. So, yeah, that's about it for today. Thanks again. Wish you great days, upcoming days, and hope to see you in the remaining webinars this month. And talk to you soon. Cheers.